Good morning. Get some charts up here. I regularly forget as I do. All right. So markets are poised to go lower. And I think it would take a miracle to stop that. We got a pretty bearish pattern here, and we're looking at the futures to start. And markets are off the lows a little bit. And so my support line here was based on these overlapping opens and closes that we looked at last week and mentioned, that when you see that, these aren't overlapping that much. They're kind of like this was a more powerful move up, even though it wiggled back and forth here on this day. You can see it opened where the prior day's close was, and then the next day opened where the prior day's close was. So that was, if you're looking at that kind of like on a line chart, it just kind of popped up sideways a little bit and up. So it was a pretty powerful move. And what creates the concept of a void is powerful moves. And so a little overlapping bars like that leaves some consolidation or support. And if we were to scroll over there to the left, we would see that little consolidation there. Maybe there's a pivot because it really didn't overlap that much. But anyway, this is where the support was. And you see it bounced off of that last night, come up there a little bit. And, there's nothing going to, that in of itself isn't going to negate anything as far as the bearish view here of this. You'll see on the SPX, the bull sandwich, as Dan has coined it. But this went up and it knocked back down again. And this green day, if you remember, institutions were buying, like crazy tech stocks, and next day it fell apart. What could be more bearish than that? I mean, just common sense. Some we call it a green bar ignored. Well, how big was that green bar that was ignored? It was relatively pretty big. Not that big in relation to the big nasty red bar. It was in the lower half. So overall, this was a bullish move. This was a bear sandwich, and that was the continuation move up, and now it's falling apart. So here we go. And there's really little to nothing to stop it from going down at this point. If it was able to somehow get back above this red bar, we'd have to change our bias. And as we can see, just based on the hourly chart and the move down, there's some resistance here, but there really isn't much. So the next concept that has to come into play here is the one of creating resistance. And what does that mean? Well, that means that it's got to pivot, and it'll do, obviously, it's doing it on a 5-minute chart. Everything happens faster on lower time frames. But on a more meaningful time frame, like a 15, 30, 60, it'll come up and it'll pivot, and then you'll get some kind of a retest. And just looking at the 15 here, it might get up to here. That would be pretty deep, but that's what we're dealing with here. We're dealing with this bearish daily, a reversal on the weekly, powerful move, but the power, excuse me. And so we'll see if it pivots here, and I guess that's what's got to happen, and roll back over to get moving down into here. All right, SPY. So here you really got that textbook type of bull sandwich with the red bar, the power green bar up, and right back down again. Just chopping around here. Let's call it 434. 434. Well, it's going to gap down a little bit, actually. That's why I look at this chart and to see where prices are in relation to the prior day. And it's not a big gap down. So that's good for the bearish case. How do we handle that? Well, gap fill, short, or this just starts to roll over. So either way, looks lower. Now, SPX. That being said, where is the no-brainer trade? Well, no-brainer trade would be above this bar's high, and like 44.50-ish. And 44.50-ish is 40 cents by 55 cents. So that's the top of the bar. All right. And I don't have a data window there. Actually, the top of the bar is 44.60. But 44.50 should be fine. 44.45. Right, that's 44.50. I'm looking back and forth between two different platforms here. Okay, yeah, that pivot is the top there. It's really not that far away, but it shouldn't get back above that. And that's what we do with credit spreads, right? It shouldn't get back above based on this 3-bar reversal pattern. Again, what I spoke about it going lower. So maybe it bounces up, at the open to fill that gap, and there'll be a little bit more premium there. So I just want to be as far away as possible, even as bearish as this looks. We all know anything's possible on any given day for whatever reason. Okay. I'm just reading McGraw's. We sold 42.95. I guess you're covering that at the open. I don't know, 42.95, way down there. All right. So again, that's the whole idea with credit spreads. Even if something is bearish and it looks like it'll go down, what's reasonable as far as any given day? Because we're talking about a 0 days to expiration. How far can it go today? And so looking at average true range, I don't have to chart it. I just eyeball these bars, and from here to here. And if I project it down, it could easily hit 43.50. Could it hit 43.20? Well, could, less probable. And so just looking, where's the premium? 4,300. Okay. 43.10, 43.05, 50 by 65, 43.10. And so I think that's reasonable. I think that's reasonable for a spread. But if this heads lower as I'm speaking about it, that it does that and comes down here, there could be premium down here. So you got to monitor this stuff. You decide whether, am I going to do this at the open? Which, okay, the numbers that I'm saying probably will still work. 43.10, 43.05. It probably still works today, because I think getting to expect it to go down there today, probably not. I mean, unless it's an all-out route, So there you go. NQs, bouncing off of what? I have no idea. Doesn't look like there's anything to the left there. I just went to a higher time frame to compress the data, and there's just nothing there. And so this could be what could drag the S&Ps down. There's just nothing there to stop this from going lower. So to be objective, all right, so we've got a pivot here on the hourly chart. Buyer, and there's a void above. So retesting this, say at the 10 o'clock reversal period, and having a potent bar up, that could get some type of a intraday rally going into this area, but in no way would it negate the daily chart. And so as we look at this, big red bar, what's the middle of it? 14,070 or so. You can see my cursor on the hourly. That should be about as far as it gets, maybe 1,400. But for day trading, counter trend trade, it's a reasonable idea. YM showing some relative strength. It doesn't have as big red bar, but it was rejected up here. So what we need to see on the bearish case is this join the party. Not that it really has to, because have everything firing on all cylinders would be ideal. But it doesn't, if this is dropping, Qs are dropping, S&P is dropping, and so on. Obviously, everything is moving together, and looking at individual stocks that are dropping, shooting fish in a barrel. But where's support and so on? Next, right, bearish, looks like it should go down. Bitcoin lower here, breaking down. Next support is around there, 36 and change. And again, if the markets are going to go lower, this will probably break down below that support. Crude oil going up, right? Inflation. We've talked about this pattern setting up over the last couple of weeks. Silver looking pretty darn good. Gold looks great, should keep going. So pretty much everything is lined up here for things to get a little ugly, right? And we covered internals in a weekend letter. Neutral, I call this gas in the tank for this to go down. And transports, clobbered. They didn't bounce much. Maybe they hold up better than the rest. The short answer to all of this is, unless something significant happens to reverse those daily patterns that we are looking at right now, I can only believe prices are going lower. So a lot of bearish patterns out there, a lot of these bearish reversals that occurred at the end of last week. There's even looking at things like semiconductors, which have been bearish. They couldn't bounce. It's just little to nothing. There was one little piece of information that I thought was, okay, a little bit of something here is that this yield curve was beginning to improve. So it's the only thing that, and these shorter ones began to improve a bit. So it's the only thing that suggests to me that things won't be an all-out bear market. But we'll see. We'll see how far this goes and how this week progresses. And, we take smaller pieces of information, meaning smaller time frames, and move into higher time frames and look at our market internals and into market analysis and come to what we believe is a well-informed, educated bias as to what's happening in the markets. Well, yours, Dan.
Good morning. Hope everybody had a nice long weekend. Yeah, McGraw, for some reason, I thought you were getting, I thought I read you were getting like 70 cents on a $5 wide. That's what got me all excited. But yeah, then we just figured out you're getting 22. Raul asking about crowd. Crowd, you're saying a great short? Yeah, Raul's saying crowd, great short. Well, as always, the first thing you got to ask is what time frame are you proving? Because the daily is a bullish pattern. It's a bullish 1, 2, 3 with a bullish weekly with relative strength, but it's rolling on the 15. So if you are just shorting a day trade to scalp with this price void, uptrend, sideways trend, now break into a downtrend, that's fine. So, just got to know what you're dealing with. But me personally, I'd rather short something that I also have a bearish bias on the daily. And we have no shortage of those right now. We have a bunch of open bullish longs. I'm sorry, bullish shorts, call spreads, and we have a bunch more in the weekend letter. And Kitzel asking about Goggle. I think Goggle is an oil stock. Yeah, it's strong. It's had a big run though from this prior low. Look at this thing I just posted. I just saw this little guy going by the ticker. Now, Goggle, I like this one better because we're getting in after the first bar, closing breakout. So this looks, and it's in the oil patch. So this looks fantastic. In fact, I'm just going to tell them that they can do it now. Let's see, our gappers here. SYF, we're getting a big gap. I sent out an alert to sell half pre-market, and I moved the stop on the back half. This thing gapping up, BTU, we've been in trail mode. Look at that 15-minute chart. That is amazing strength right there. So we're still in it, just in trail mode. There's actually a couple of little low price stocks here that are interesting. FNGD was a bottoming pattern. Now, hey, what pattern is this, folks? That's what Craig just talked about, and we're going to do a future MT live soon on this subject. But this is a bear sandwich. Bear sandwich after a big move up. Continuation, price void, gapping up, looks good. Put that in a window. FNGB. Next, not not the same, but it had a big run, slopping around, resting here for a while. We got a bear sandwich on the weekly. This would be a great 1, 2, 3 if it would just rest today. Silver's on a tear. We're in SSRM. So here I actually tighten the stop pre-markets. Let me give it to you all. I didn't post if you don't have Telegram alerts. So there you go there. 9. Here's another bottoming pattern. But I like that it broke down. It didn't go very far, held this support, held the 50. Ideally, it'll chop around for a couple more days just to prove that it's not going lower. And then my target would be $5, $6. So that looks really good. CEI. Similar bottoming pattern, new low retest. A little bit weaker than 9 because it went deeper into the 50 here and I got more resistance here, but it's worth watching. Yeah, look at the volume on this thing. 64 million on Thursday. Raul PDD short. Yeah, that looks fantastic. Yeah, upside shakeout, lower high upside shakeout. That's what we call, we're obviously going to be getting into the MT live where we want wide range bars and everything. So it's a minor bull sandwich. But you got a big old price void. You got a big gap down here though. But put it on a 5-minute chart and pick your entry. But yeah, I like the daily setup, sure. Roblex here breaking down. Let's keep an eye on that for a call spread or 30-minute low day trade short. Nile, 100% retracement, gapping up to 0.68, which is pretty good percent gap. We'll come back to you. Here's another one I posted. Here's my wide range igniting on Thursday. I got to keep saying Thursday because Friday was a day off. This would ideally be a fantastic 1, 2, 3. I have it here in the bottom right. Let's, we're getting a nice controlled pullback. So maybe, buying an intraday bullish pullback setup is buying or trying to buy the low of a 1, 2, 3. So that's exactly what we might do. So that's a tier 1 setup. FedEx, we had a nice put spread on that last week with the transports getting beat up. Had positive mention in Barron's, but it's not getting any Barron's pop. Mullen, what's going on with Mullen? I think this is a battery stock of some sort, pattern. This Bryden EV came out and said they're having a problem getting some of the industrial metals for the EVs. Diddy gonna be delisted? I just staying away from that thing. Schwab pre-market earnings gapping down under this green bar. That's bearish. Let's keep an eye on that for a call spread. Put that in a window. BK, Burger King, gapping down on earnings. That's a big gap down. It's not Burger King, McGraw. I know it's early. But yeah, banks. This is banks always start off earnings season, and I see XLF down pre-market. Yeah, right there. BAC was up, now pretty flat. I think I heard a stat on CNBC that said they didn't have a single losing trading day this year. You don't think they have, well, granted, they got some smart people and they got some smart algorithms that give you all that, but don't you also think they have, maybe a little inside information on order flow and things like that to give them an edge? I surely would think so. All right, Triple M here. All right, so I'm done with gappers. These are just my watch list here. So Triple M lower, Schwab, oil's up pre-market. So that looks higher. Schwab, let's put that in a window. And we're still in a couple of oil stocks also. Trex, that looks fantastic. Continuation short. FTV short. Rock short. Zoom. Actually, this is one of those things that if it can get over the green bars high, which is Wednesday, holidays always mess up my counting days. It actually looks like a put spread. Upstart, it's far from the 20, but that's a bear 1, 2, 3. Snap has room. You can short under the pre-market lows. Set an alarm on that. Let's set it right at 33. Actually, my pre-market alarm went off on that at 33. And this Elon Musk is sure shaking up the industry with Twitter. Roku, there's a short. That's great. Mictra, short under the lows. LCID, short under the lows. Let's see here, the low 2083. Let me set an alert. Fast and all. Now that's not a bull sandwich, but it's a 180 reversal. So that's a day trade short idea. Bear 15-minute chart. A firm short to low. That looks fantastic. Under 35.05. TTD. That's a beautiful short. And there was no problem finding shorts. Base. I like that as a bull 1, 2, 3 from consolidation. Set an alarm at 1842. Well, 1840. It's gapping down a few pennies. Dish. I think Dish is long. We're short puts here, but Thursday's high looks like a directional long. Delta 20 road. Way too sloppy for me, and it's up 4 bars, so I have no interest in that. A pump up alarm. So we're long this. Let's move stop 1548. Our buyers stepping up here at the first opening 1 minute. Doesn't mean a whole lot, but so that might be good then for 5-minute lows on shorts, because then it would have to reverse the morning strength. Nitra alarm.
Coop. COUP. No shortage of ideas of lower prices.